Happy Wednesday, everyone. As many of you may have already seen, Bank of Canada has decided to hold the rate steady at 2.25%. This isn't really surprising, and it's ultimately what we expected based on the state of the world right now. I think the interesting thing to take away from this hold is that it's not an indication of things being steady, it's an indication of things being uncertain. And what you have is two trends that are working in the opposite direction that the Bank of Canada is really trying to understand which one is going to net out as being more impactful. And those two trends are rising risk of inflation due to what's happening in the Middle East, as well as a weakened Canadian economy. Each of those would drive rates in the opposite direction. That puts the Bank of Canada in a really difficult position on deciding how to move forward. Again, not really surprising that we saw a hold today, but I'd say what's new is the indication that there is a hike in consideration in the future is the likelihood of decreases. So it'll be interesting to track along with the Bank of Canada's thinking, especially as we approach the next announcement. In terms of how we expect this to impact the housing market, we don't. It's a rate hold, and even in an environment where we saw rate cuts last year, it really didn't move the needle there either. There's just so much else happening in the world that is impacting people's thinking on whether or not they want to transact. We don't see a real change on that in the near future. So whatever happens with these rate cuts probably isn't going to make a huge difference in the market, although people's comfort in transacting in the market is very much related to similar things that are impacting the rate announcements. So we'll track closely with this and we'll check back in on the next rate announcement.